On today's episode, we are going to take a look at three more growth stocks. These are some of my top stocks right now. And for each company, we're going to do the following. First, I want to talk about each stock and talk about why I'm bullish in the markets they're in. Then after that, I want to take a look at the revenue breakdown to see how that money is coming in for that individual business, followed by their past and future growth for the companies, because I want to see where this company is going and where has it been in the past. And then I just want to do a quick overview of their balance sheet to make sure that this is a healthy company right now. And finally, I'm going to give my thoughts and rank them right now within these three companies to see which am I more bullish on. And like always, if you are new to the channel, if you are a long-term investor, if you want to learn about growth stocks, make sure to hit that subscribe button. To all my returning viewers, thank you so much for all the support. It truly means a lot. Like always, if anybody wants to get in contact with me, you have YouTube comments, you have Twitter, you have my Discord channel, you have my weekly newsletter at josenajaro.com. All of that information is free, right? I don't charge anybody for anything here, but remember, I am by no means a professional, so none of this should be taken as advice. All of this is just my opinion, so make sure to talk to a financial advisor before doing any form of financial stuff. Yeah. And before we continue, I just want to say thank you to all those that have joined the YouTube membership. These are people that are supporting the channel. Even though everything I provide is free, they believe that the value I bring to this video is enough for them to do some form of support to the channel. So thank you guys. Like always, I truly appreciate it. And for those bullish members, I just posted a new post where you can put your questions that you guys want me to answer on a video on this week. So make sure to just go back there and check it out. You can see if you are a bullish member, you can post a question and now answer it at the end of the videos. All right, so the first company I'm going to take a look at is Facebook. And for those that don't know, this is my video series. I kept getting a lot of questions asking what are my top companies. And right now, I can't say that I have a top 3 companies. I have top 9 companies. So I broke this down into 3 series. The first one I did yesterday, so make sure to check that out. Today I'm doing another 3, and then tomorrow I'm going to do another 3. And the reason I broke it out is not to get more episodes, right? That's definitely not the purpose. I want to make sure I give all the information that I can with these videos, right? So with all these 3 stocks, we're going to take a look at a lot of information, and doing all 9 stocks would just be insane, in my opinion. It will probably be over a 3-hour, maybe over a 2-3 hour show. So I'm trying to break it down into segments. Yesterday I did 3. Make sure to check that one out. Today I'm going to do another 3. So these are going to be my top 9 overall after the 3 episode series is done. So the first company we're going to take a look at is Facebook, and Facebook right now is ticker FB, and it has a market cap of $760 billion. And let's take a look at Facebook's revenue breakdown to understand what this company does and where it makes all its money. So in the most recent quarter of 2020, quarter 2 of 2020, this company makes revenue from two segments. The first segment is advertising, and here I'm going to try to zoom in with you guys so you guys can see better. Advertising, we can see, makes up almost the whole portion of this company's revenue, and we're going to break that down a bit later on. Then the other small portion is other. So out of $18 billion that this company made in revenue, $18.6 billion, 18.3 came from advertising. About 300 million came from other. And other is pretty much like this company's virtual reality platform and some other small items that they might have and continue to grow. But the Oculus virtual reality is one of the biggest platforms in their other revenue. And the advertisement revenue is pretty much exactly what it is Facebook has 3 main programs. It has Facebook, it has Instagram, and it has WhatsApp. To be honest, I don't think WhatsApp has any ads on it, but Facebook and Instagram are ones where companies come and pay Facebook to advertise their company, to advertise whatever they want in these platforms. And right now, these are the platforms that are growing and still seeing strong amount of memberships being added. If you take a look at their earnings report, you can see that their family monthly active people, and the family, they mean the whole group of Instagram, of Facebook, of WhatsApp, continues to grow. Right now they're seeing about 3.14 billion active people monthly on their platforms, where same time last year was 202.76. And like, again, that shows this growth of users still coming into their platforms. Again, maybe we might not be using Facebook right now, maybe they are moving to Instagram, but we can see the overall platform is still seeing great things. So what happens when you have all these eyes looking at you? So let's say if I was a business and I wanted people to know about my business, where would obviously be the place where I want to talk about my business, where everybody's at. So I would, that's where I'm seeing that huge growth. Facebook is continuing to develop its platforms. Maybe sometimes it might be taking some of the platforms that work. I think recently they kind of are trying to mimic TikTok. Again, they understand their market. They're trying to make sure those eyes stay there. And with those eyes staying there, the companies are going to come and pay Facebook. And they're continuing to evolve, right? I don't know if you guys follow much in the e-gaming industry. The e-gaming industry is one of my favorite businesses that I follow. And Facebook just partnered up with Microsoft. I don't know if you guys are familiar with Twitch. It's a live streaming platform. Microsoft had a similar live streaming platform. It was called Mixer. Unfortunately, it did not do as well. And now they're partnering up with Facebook to bring those members from Mixer to Facebook Gaming. So it's going to increase the amount of people coming into their platform now, especially where I feel like e-gaming is a platform that's going to continue to grow. To see that being moved into Facebook with Facebook Gaming and now working with Microsoft on that, I, again, continue to show more bullishness in there. More eyes are going to be there. More advertisement companies are going to come and continue to pay Facebook for advertisement. The last thing I want to talk about on Facebook in their revenue is I just recently looked at a Twitter. I personally don't have a Facebook or Instagram, but I do understand how strong these platforms are. On Twitter, which I do have, someone mentioned that they ended up purchasing they were on Instagram. They saw a Thai restaurant around their area advertisement. They were able to order all their items, everything they want through Instagram, and then they ended up paying via Venmo or Cash App. It was, I think those were the only two mobile payments available in them. So you can see, right? It's just that everybody's looking there. They know where to advertising, and now they're making it so easy where you can do everything from just ordering your food there. To me, it seems amazing. All right, so next let's take a look at the future growth for this company. So Facebook right now, its revenue is expected to grow 17.5% on average annually for the next 3 years. This is faster than the industry. The industry is expected to grow at 16.1%, and the market is expected to grow 9.6%. So this is a business that's going to grow faster than the industry, faster than the market. It is already profitable. It's in a platforms that are seeing huge market growth as well. And again, we're seeing that high growth. Again, it's not as strong as normally I like to see 20% or higher, but this is a big company already and still growing at 17%. What's there not to like? Earnings growth is growing again as well, 18.3% annually on average, when the industry is growing faster at 20.9 and the market is growing 23.8. And you'll be like, Jose, why would you want to invest in this company that their earnings growth are not growing as fast? Remember, this is the industry and the market also has a lot of companies that are not making money right now or have just started to make money. And those, when they're growing their earnings, they might be growing earnings at 100%, but it might be going from like a penny to 2 pennies. So that kind of skews, it kind of like messes up a little bit with the percentage weight. But at the end of the day, a company that's already making money, that's been profitable for as long as I can see, and is still growing at 18.3%, that's more than I need to know right now. So now let's take a look at their past growth. How has Facebook done previously? In 2019, its revenue grew 26.6%. In 2018, it grew 37.3% year over year. And in 2017, it grew 47%. So we can see that's some strong growth. Unfortunately, right now, due to COVID-19, there is a slowdown in advertisement, and that's completely foreseen. They have mentioned it again. They have mentioned it plenty of times, but it's just the way things work right now. With the whole COVID scenario, Companies try to save money, and one of the best places for them to save money is to cut down on advertisement, and that's what Facebook is seeing. And I think it's something that we're going to see that this year it is going to grow its revenue pretty strong, but not as strong as previous years, and I'm okay with that. All right, so next what I want to take a quick look is just this company's margins. We can see profit margins for Facebook are pretty high. The most recent year of 2019, they had gross margins of about 82%. Their profit margins this most recent year were 26.1%. So they make a quarter of the sales in money, and that's pretty impressive. But one thing I do want to mention, Facebook on 2019 did pay a nice amount of fees due to privacy stuff, and that's something that's happening a lot with Facebook. So that usually cuts down their profit margins. We can see profit margins the year before that was almost 40%. So it did take a huge dip. And this is something that I do believe is a risk with Facebook, especially with the whole privacy and everything that's going around in the world. They have to be careful with what they do. And I do foresee this as a risk for the company. But usually with risk, it sometimes helps. If things go well, it can do great returns for you in the form of investment. All right, so now I want to take a look at Facebook's balance sheet to understand where they are financially in their financial health. First, they have about $10 billion in non-current debt, and they have about $1 million in current debt, so close to $11 billion of total debt. At the same time, this company has $37.2 billion of current investments and $21 billion of cash and cash equivalents. So that's close to $58 billion. So this company has enough cash to pay off its total debt. And this to me tells me one thing. Facebook, if they see something that they want to buy, they're going to go and buy it because they have the cash right now to go out there. So in the future, I can see Facebook doing some acquisitions to continue to grow their overall platform. So we can see that that's it for Facebook. And we can see, right, it is a market. It's in a market that I think is going to continue to do well. They are doing very well with making sure that they continue to have users in their platform. They're seeing strong growth. They have a strong balance sheet. And we can see why this makes it in my top 9 right now. So Facebook is another company, just like all my other ones, is one that right now I might not go all in, but I will dollar cost average to build my position on a timely manner. And that's just my style of investment. It might be different for everybody else. And as we do these videos, I'm going to talk about which ones I prefer over the other one. So next, we're going to take a look at Tencent, and this is ticker TCEHY. Forewarning, this is over the counter. It's a Chinese company over the counter. So many people might not be able to buy it. I don't think Robinhood allows the trade of some over the counter companies, and this might be one of them. All right, so let's try to understand TCHEY and why I'm so bullish in this company. So let's take a look at their most recent earnings. So in their most recent earnings, they kind of did this pretty awesome. They broke down their revenue into where it comes from. 23% of their revenue comes from social networks. 34% of their revenue comes from online games. 16% of their revenue comes from online advertisement, and 26% of them comes from fintech and business servers. And in that business servers, we have their clouding market, Tencent. And if we remember this chart yesterday, because I talked about one of these companies yesterday, Tencent is also one of the top leaders in the clouding market. Even though they only have market share of about 2%, they are one of the top 10s right now. So we can see already what markets I'm bullish in Tencent. The first one is online games, which makes up 34%. The second one is fintech and business servers. They have that online advertising, very similar to Facebook, and the social networks. But for me, my biggest drivers right now are the online games and this fintech and business services. And many people might be surprised the companies that Tencent owns. So if we take a look at their PowerPoint presentation of their most recent earnings, they kind of already break down these platforms. So in their social networks, they have communication and social platforms like Weixin and WeChat. They also have QQ. They have media and digital content. They have Tencent Music Entertainment, which is something like a Spotify, a Pandora. They have a video system. They have online literature, news feeds, and then in utilities, they have the application app, the app store. They have like a security manager app. So we can see, and then they talk about how they collect the revenue here. Next, if we take a look at their online games, they own a lot of the number one games that many people here might know. They own the company that made PUBG. That's one of the most played games right now. It's the number one international smartphone game by daily active users. They also own League of Legends, Peacekeeper, and Honor of Kings. They have over 140 games in different genres. Let's scroll down real quick so you guys can see those genres. I'm pretty sure they share that information somewhere. See, they own Epic Games. Epic Games is the people that created Fortnite. They are the ones that have Unreal Time Game Engine, which is a platform that's used to create games. They own Riot Games. Riot Games, I think, are the creators of League of Legends. They own certain portion of Activision. They own about 37% of C. That's also pretty impressive. And one I talked about, we can see they own Huya. They own Doju. They own some portion. And these, they own a huge percentage of it. Huya, I think they own now over 50%. Doju, they own about 30%. They own some portion of JD.com. So we can see they own PTD. So that's that other e-commerce market. So we can see this is a company that has its portfolio really rounded. So these are some of the main reasons I'm very, very bullish in Tencent. We talked about their online games in social platforms and other advertisement. They have advertising very similar to what you see on Facebook, very similar to what you see in Instagram. They have media advertisement as well. So if for example, if you listen to Pandora or stuff like that, those are the types of advertisements you see there. In the fintech, they have some form of e-wallets. They have commissions from financial institutions with big banks, microloan products, and then they have Tencent Cloud. So these are all businesses, all markets that I'm very, very bullish on. So we can see why Tencent is making the list. So now let's take a look at this company's growth. Right now, Tencent is expected to grow its revenue 17.3%. And this is actually very similar to Facebook. I had to actually click back to make sure I wasn't looking at Facebook. So 17.3% annually on average for the next 3 years. That's faster than the industry, which is 16.4%, and that's faster than the market, which is 12.2%. Annual earnings is expected to be 16.9. Again, this is very similar to Facebook in terms of growth. And we can see this is a company that's already making money. Tencent is making money right now and is continuing to grow. So I'm seeing a strong growth in revenue, strong growth in earnings. Next, let's take a look at their financial health. Tencent at the moment has about 260 billion yuans is the Chinese currency that they're using here in cash and short term. They have about $273 billion in debt. So they have a lot more. They have about 13 billion yuans more in debt than they have of cash. So you might be like, Jose, this is not a company with a strong financial health. So why are you in it? And I think this is the most important, to understand the state of mind where a business is in. What stage is that business in? So normally growth stocks are companies that are not making money, and they're not making money. So I want them to have a very strong balance sheet because they're not going to be making money right now. So they need to be able to survive. Tencent is in a whole different category. It's a company that's making money right now. So it's okay for them to have a larger debt than their cash and short-term investments. The perfect example would be, let's say I didn't have a job, right? And let's just say I quit my job tomorrow because I wanted to do this YouTube stuff full time. At that moment, I would want my balance sheet to be stronger. I would want me to have a lot of cash right now because I'm not going to be making money for some time. So for right now, I want to have a lot of cash to be able to sustain myself for the upcoming months, upcoming years until I make a lot of money. But now let's say I have a very good job and I'm getting paid very well as an engineer, let's just say. Well, now as an engineer, I have a very strong income coming already. So it's okay for me to take out a mortgage, right? Now even though my income is this value, I'm taking out a debt that's a lot higher than my income. But I'm seeing that money coming in. So I have enough money to pay that debt. So that's pretty similar to why it's important to understand what stage a business is in. Are they right now with no job and trying to grow a business? Or are they right now with a very strong job bringing in money, so it's okay for them to have a little more debt. And that's why, again, when I take a look at growth stocks that don't make money, I tend to be a little harsher on their balance sheet. Tencent is not that case. It's making money, and it's right now, it's okay to have a few more $1 billion in debt than they do of cash and short-term investments. So now let's take a look at TCHEY. So that's it for TCHEY. So we can see the markets I'm in are very bullish, and we explained that well. So now let's see, Facebook or TCHEY, where would I rate who? Honestly, I believe I'm a little bit more bullish on TCHEY than Facebook right now. So TCHEY is one that, again, this doesn't mean I'm not going to buy Facebook, but let's say on a weekly basis, when I put money in my stocks, I would more frequently put on TCHEY than I would on Facebook at the moment. All right, and the final one we're going to take a look at is Spotify. And this one might be a little different. Many people might have not seen this one coming. So this is my number 6 stock right now and my third one today. So Spotify, ticker SPOT. So now let's try to find out why I'm bullish in Spotify. Spotify right now has a market cap of $50 billion. So you may be like, Jose, why are you so bullish in Spotify? They're just a music company. And that's the thing. I don't just see them as a music company, right? There's so many different platforms like Apple Music. There's Pandora. There's Android Music, I believe, right? There's other different platforms. But that's not the reason I'm bullish in Spotify. Spotify is working on making original audio content. And I do believe audio content is a future moving business. And the reason I believe this is because people right now, the most important thing for them is time. And for time, most of you guys, if you're watching this on YouTube, you're most likely doing something else while watching this video. You're probably playing a game and you're just listening to me as a background. And this is the great thing about Spotify and the audio content. They're making audio content that's going to be original to them. So I can see this as a Netflix style of audio. And again, Netflix would be a prime example. Netflix, we have like Disney Plus. We have Apple TV, we have Amazon Prime. There's all different platforms. But why do people go to Netflix? Because Netflix has originals that other platforms don't. I have Netflix, I have Disney Plus, I have Amazon Prime. They all have originals that I like to see, and that's why I'm in those platforms. Spotify is one that I feel is gonna go that same direction. Right now, we can see in their most recent earnings, they talk about the type of content they're producing. We know this quarter they did a lot of multi-year exclusive deals with people like Joe Rogan. I think they have one with Kim Kardashian. They also announced a multi-year partnership with Warner Brothers, the creators of DC, to produce and distribute original scripted podcasts exclusively for Spotify. This types of content are what's gonna drive people to Spotify. They have Harry Potter at Home came to Spotify. I think they have something with maybe Michelle Obama. They have a lot of great content here. And we can see, based on their numbers, the total monthly active users that are engaged with podcast content is 21% right now. And that's up from 19% just a quarter ago. So just compared to a quarter ago, they're seeing more people using podcast content. So it's showing that market is growing. And remember, we're seeing last quarter was 19%. This quarter is 21%. But this quarter, they also even had more people coming into the platform. So that number, even though percentage-wise, it only grew 3 percentage-wise, the actual number that it grew at is probably a lot bigger. Another reason I like Spotify is I think they're changing the whole way music artists talk to their fans. Right now, if you have Spotify, if you are an artist, you can share a lot more than your music. You can share like your merch. You can share your upcoming tours, and it's very, very easy to do that. So it brings more artists in there to be able to interact with their fans. And I think this is going to drive more people coming in from both sides, more artists coming in and more fans coming in. So they're just revolutionizing this whole audio marketplace. So now let's take a look at their revenue breakdown. It's very simple. They make money either two ways. Let me see if I can scroll it in for you guys. The two ways that they make money is premium subscribers, so people that pay on a monthly basis, and that's where most of their money comes in. The other is ad supported. If you don't want to pay for a premium membership, you can get advertisement, and that's where that ad supported revenue. But we can see most of the money comes from premium membership, and we can see total monthly actives every quarter are continuing to grow. Year to year, this quarter, monthly active users grew almost 30%, and compared to a quarter ago, it grew 5%. So Spotify is very, very interesting to me. Between the three right now, Facebook, Tencent, and Spotify, to me, I find Spotify to be the most risky out of the other two that we looked at. But I believe Spotify, if it perfects the market is going to do, is going to be the one that provides the biggest returns out of the other. But that's the thing you have to understand. You have to understand your risk tolerance to see, hey, am I willing to risk a little bit more on Spotify, even though I would consider more of a riskier state compared to where the other two are at. But if it does do well, this is one that I feel will produce stronger results. Let's take a look at Spotify's future growth. So their future growth, this company is expected to grow 17.3% annually on average for the next 3 years. That's faster than the industry, and that's faster than the market. Their earnings growth are expected to grow a lot faster, 76.4%. But remember, this is a bit different. You guys can already understand why it's growing this fast. Remember, we saw Facebook and we saw TCHEY not growing as fast, but they were already profitable. So this, to me, I already know the answer, but just looking at this type of earnings growth, to me, it tells me that right now Spotify is not making money, and that's why we're seeing that growth. And that's what's happening. Spotify right now is not profitable, but it is expected to be profitable within the next 3 years. And that's okay with me. I normally take a look at companies and want them to be profitable in the next 3 years. But what does that say? That tells me when we're taking a look at their financial statements, we have to be a little bit harder on them because they're not making money right now. Unlike Facebook, unlike TCHEY, where I could have been very easy on them. Right now, Spotify has 1.7 billion euros in cash or short-term investments. They actually have no debt whatsoever. No debt whatsoever. And that, to me, guys, is an amazing, amazing balance sheet. So we can see why Spotify, for me, makes this list. So we see, all right, so the three companies, I feel like between these three, Spotify would be the one I'll be buying the most of, following by maybe TCHEY, and then following by Facebook. But remember, these are some of my top companies, so I'm buying them all. I'm building my position in all of them. Spotify is the one I feel is a little bit more risky amongst the other because I feel like there's so many unknowns right now. But we saw that amazing, amazing balance sheet, which gives me faith that this company can continue to do what it's doing for a long, long time. And even with all these multi-million-dollar deals that it's doing, it still has no debt whatsoever. So Spotify, to me, is one I'm very, very bullish on right now. And just doing these videos, right? This is why I love doing these videos. They get me even more pumped up. It reminds me why I'm in these companies. TCHEY, we have all those great gaming companies in there. We have Epic Games. We have C in there. We have Riot Games. And Facebook, we're seeing that platform grow. They're going with that e-gaming, Facebook gaming. They're still super strong in monthly active users. So like always, guys, I hope you guys enjoyed today's episode. Tomorrow, I will talk about my final three. And actually, let me know in the comments. Can you guys guess my final three companies? And was any of these three a surprise for you guys? So take care, guys. Have a good night and see you next time.